Should I first work on my psychology first, or should I first work on my strategy first?
Mindset, behavior, and character.
Overtrading can be termed in two ways, in losing side and then in profit side.
Exactly. Change of the mindset is the hardest thing. Before you take that trade, find out how much money you're willing to lose off that trade. You tell someone, go and work on your psychology, and they're working on it from a demo account. Come on.
The wins and the losses, what do you think brings emotions the most?
Fear. You find them that they are good at a strategy, they can teach it to someone, and those people that have told they can make money, find themselves they're not even using it. Losses contribute more to emotions than wins.
There's a time I deposited $1,000 and then I went in a drawdown of almost like $600. How does a trader supposed to react? How do they come back from drawdowns and then they eventually see themselves making money?
Okay, so
So psychology and technicals, which one makes a trader? Today we have to understand. I hear a lot of traders saying technicals is what makes you a trader, and others are saying 80% of a successful trader is supposed to be very good in psychology. And today we are going to really find out, because we are going to really dive deep into psychology and technicals, and we really know what is a trader supposed to really focus on. I've seen a lot of traders out there understanding how to analyze the charts, but unfortunately they fail to make money. What could be the problem? Never know. So you're going to look in right here and then we find out. So welcome to the Boz Podcast, and today we are going to discuss none other than psychology. And I'm your host, Osman Lakan, and today we have someone very special. They normally emphasize mindset, and today you're going to understand why do traders really need to master how they think and how they react. So welcome on set. He's none other than, we call him Mentor Benon, the doctor of psychology. So you can tell us about yourself and then we dive into this.
Thank you for this opportunity to show up here at the Boz Podcast. I'm really glad to be here. As you've said, my name, I'm called Benon, a forex trader, and I'm mentor at Forex Boz Academy. I've been in the industry since 2019, up to now, trading here and there. So definitely we are going to let people know between technicals and psychology, what really gets you to that consistency.
Okay.
Yeah.
So how long have you been trading?
Definitely over 7 years, since
Over
2019
7
up to 2026.
Wow, that is interesting.
Still trading, still in the game.
Wow.
Yeah.
Okay, so Benon has been trading for almost like 7 years. And remember, we learn from people's experience. A wise person will always learn from someone's experience. And today, if you really listen very well to what he's going to tell us, you can move one step close to your financial freedom. So, Mentor Benon, tell us, what is psychology? What is all about psychology when it comes to trading? Okay,
now when it comes to trading, psychology is more of mindset, behavior, and character. Yeah? It's how you think before a trade, how you behave before a trade. How do you behave when you're in a running trade? Actually, how do you behave before taking the trade? How do you behave when you're in a running trade? How do you behave after the trade? Because they're different behaviors, and you have to take note and work on those things before you can start making money consistently in the market.
So basically, psychology is all about behavior before taking a trade, when in a trade, and after you take a trade. I think that is something very important, because in most cases, I see a lot of traders, they react differently when they are in trades. Someone can take a trade, they even fail to hold it just because of what is really going on.
The moment they see a little blues, they close.
So basically, it's all about the behavior inside you. And I think that is something very important. So I have a very good question right here. So as a trader who have been trading for almost 7 years, do you really confirm that psychology is more important than a strategy, and then why?
Very good. Psychology is more important actually more than technicals or more than a strategy, because you can learn the best strategy there is, but then you can't get rid of fear to execute at the right moment you're supposed to execute. And that is what? Mindset, which is still psychology. You can learn the best strategy, but you cannot let the winners run. You keep on cutting them short. You understand? You can have the best strategy, but whenever you're losing, you keep on adjusting your stop loss. Still, that is psychology. So psychology overpowers technicals or strategy.
So what should a trader first focus on? Should I first work on my psychology first, or should I first work on my strategy first?
I always suggest you first work on your strategy or technicals, then you work on psychology next. Because psychology actually requires, doesn't have a big duration or time that, you know, I literally have to learn this and that. It's more of you sitting yourself down and talking to yourself that, okay, I have fear for this. You understand, Osman, even though you have fear, and I talk to you that you have fear, don't fear, you cannot stop fearing because it is personal.
Absolutely.
It is mindset, you understand? You literally have to sit yourself and do the positive talk to yourself.
Okay.
Yeah.
So you confirm that someone to really be a good trader, they're supposed to first work on their strategy and then later work on psychology.
Definitely.
Okay.
If they can as well, they can work on both, because as you're learning the strategy, you're executing trades.
Okay.
So if you can do the both of them at once, the better.
So what are some of the common mistakes, some of the common emotional mistakes that traders make?
All right. There's one which we call overtrading. Yeah. Then there's revenge trading. Those are the most, I'm just giving the major. As the major, what most beginner traders are going to face when they come in the industry. Yeah?
Yes, sir.
You're going to face overtrading, and then you're also going to face revenge trading. Because when you overtrade, definitely you're going to lose somewhere. You all know that, yeah? Now, after that, you're going to do what? As a beginner trader, come and revenge. Yeah. You understand? But what are you revenging? Did you just hand over that money in the market? No. So you're not just going to pick it out. You understand? So those are the most common mistakes. Okay. People don't, beginner traders, let me not say people, beginner traders, they don't want to accept the losses. So they come back to revenge. Revenge is not required, yeah?
Okay. Yeah. So revenge normally comes from overtrading.
Not exactly, because those two, overtrading, you can overtrade and then you don't lose, but also that causes something different that will lead to losing actually. Overtrading first of all causes two things. Yes, you can have a losing streak, which definitely will lead into revenge trading. Then overtrading can as well lead you into winning, a winning streak, and then it can cause overconfidence. And then from overconfidence, then you can blunder somewhere, you can make a mistake, and then maybe in the next trades you increase your lot size and then you blow your account. And then what next? Revenge trading.
It makes you feel
one thing leads to another,
Overtrading can be termed in two ways. In losing side and then in profit side.
Exactly.
So I can be overtrading, then losing money, which is going to kill my confidence. At the same time, I can be overtrading, making money, which is going to make me think that I know a lot. And then eventually I make a mistake.
Exactly.
So now, if you're there, I don't want to say that making consistent wins is overtrading. But first of all, what is overtrading? Is it taking multiple number of trades? What is overtrading?
That's a very good question. By the way, we've been talking about overtrading. What is it exactly? Now, overtrading, this is when in a day you take over like 10 trades as a beginner trader. So if because we have 5 trading days in a week, so in a day, if you take over 10 trades, it means that by the end of the week, you would have taken how many trades?
50.
Actually, 50 trades, Now, that is overtrading. You'll find that a profitable, consistent trader, they're literally in a week, they're taking like 4 trades, 3 trades. And they have massive profits to show for them, But for you, with your 50 trades, you have nothing to show for them. You understand? So that is what overtrading is.
So overtrading is taking multiple trades
in
on
a
daily basis. Which is not okay. I think it really affects your psychology. So overtrading can bring in revenge trading, most especially when you're losing money.
Definitely.
And then when you're making money, it makes you feel like you're too. Then so you just keep on placing
you just keep
more
going,
trades.
Until you make a mistake.
Wow. So how do I overcome that?
How do you overcome overtrading? First of all, how you overcome overtrading? First of all, you get a plan. Get a target. Set goals. Goals is that you'll be like, maybe in a day I'm targeting this amount of profit, and when you make that amount of profit, you stop. That's actually, there's even a question normally which is asked, when do I stop? When do we get to stop? Because the market never stops during the weekdays. So normally people ask that question, they have that problem of overtrading. You understand? But from you setting goals and you're like, okay, in a day I want to meet this target. When you meet that target, definitely you're not going to overtrade. So you set goals and then you meet them. When you meet them, respect them and stop. Don't force any more trades. Stop. So that's how we can avoid overtrading, by setting targets. It does not only apply in profits, but it also applies in losses. You can be like, maybe I'm willing to lose this amount of money in a day. So when you lose that money, stop, do corrections, and then prepare for the next day. Don't go again to revenge trade. Because one thing, as you have seen, leads to another when it comes to psychology.
So now, I want to clarify something here.
Yes, sir.
You've talked about having a plan and then setting goals.
Yes, sir.
Let's assume I want to make $100 in a day. Can I take 5 or 7 trades and they give me $100? That is possible, right?
It's possible.
Should we consider it overtrading?
Yes, it would be. Because what kind of strategy are you using, first of all? To take 7 trades to give you $100. Okay. Yeah, it means that still you do not have a proper plan.
Okay.
In planning, I can set a target in terms of planning, simple plan. There's a target because now when it comes to trading, we have like 3 types of plans. Okay. You have your personal plan in terms of targets. Then you have what we call a risk management plan. Okay. You also have what we call a trading plan. Yes, so a risk management plan, that's where it comes in play. You understand that? Okay, I'm targeting $100, so I don't have to take over 7 trades. I'm targeting $100. I can take like 2 trades using what lot size 0.5. Okay. So in case in those 2 trades, I can either hit my target or I hit my stop loss. You don't have to prolong that. Okay. The trades you're taking, because as I told you, one thing leads to another. So yeah.
So being in the market for so long can make you overtrade. What Benon is trying to emphasize here is make sure you're not taking multiple trades, because the moment you take multiple trades, you're going to fall in revenge trading, and revenge trading is going to bring it's going
fear,
to just
kill your confidence and all that stuff. Yes.
So how does fear affect making a decision, taking a decision in trading?
How does fear affect taking a decision in trading? Okay, yes. Now fear, I regard it to be, first of all, what is fear? Fear is more of a mindset thing, from what happened maybe previously. Now, most people have a tendency of using their previous results to determine their current results or their upcoming results. Okay. So at times, that doesn't work that way. Yeah, if you have a system, if you have a plan you're following, you understand, like a trading plan, and you always follow that. Yes, sir. So that can easily kill fear. But now, if you don't have that, definitely you'll think that, okay, yesterday I lost, so today I think I'm prone to losing again. So you'll get a good trade, and then before taking that trade, what is going to happen? Fear. At the time of you pressing these buttons, either buy or sell, you're going to fear to execute. And that will delay you. Now, by the time you make up your mind, the market has moved. So by the time you're executing, you're going to have a big stop loss, So fear kills confidence before execution. You understand? And then it's going to lead you to execute late. Okay. Then in terms of winning, how does fear affect? The moment, this happens to very many beginner traders, the moment they take a trade, they see little blues, they close. Wow. So in terms of that is also securing, fear. That is also fear. Yeah. They fear to make money, in other words. They're here to make money, So the moment they see small blues, they close those blues. Okay. You understand? Now that is fear. Why are they fearing? Now they fear to lose that little they have made. Rather than letting it run and turn out to be bigger. Okay. So in other words, that's why I say they fear to make money. So still that is fear that leads them to close that profits early. Okay. So
So fear comes in 2 ways. Before executing a trade, also when you're in a trade. Yeah. I think that is what you started with. Psychology is before, in, and then after. Some people only focus on psychology maybe after. Because what I've really realized is they want to know how do they react when they lose money or when they win money. Yes, and then they forget it comes from even before executing a trade. Yes, because what you've really emphasized is before executing a trade, you can get, sometimes we call it analysis paralysis because of the previous loss. Yes, and then when you're in a trade, you're scared of now losing what you've made. Okay, so how do we fight that?
How do we fight that?
Yes, sir.
Now, fear, first of all, it's a personal thing. The number one way how you can fight fear is through positive talk. Okay. Positive talk, not to someone else but yourself. Okay. You understand? Sit yourself down, and then talk to yourself. You understand? Yes, sir. Do not let your previous trades determine your current trades or your coming trades. Yeah. Okay. And then the thing in trading is let your winners run, and then cut short your losses. There is a reason why that it's like that, not the other way around. Are you together? Yeah? So when you're in a winning trade, and then you feel like closing, stop. And then remember that you're supposed to let the winners run. And when you're losing, close. Okay. Are you together? Yeah. And then also respect your stop loss and take profit. Okay. Very many beginner traders set those things, but they don't meet them. Okay. Normally, the problem with stop loss, they just keep on adjusting. With a take profit, they don't reach the take profit. You understand? But then you ask, why did you set them? In the beginning. So respect your stop loss and take profit. That comes from your trading plan. That, okay, I'm going to enter from here, exit here, and all that stuff. So let the market move. Okay. Yeah.
So that is the best way to fight fear is positive self-talk. Talk to yourself, build your confidence, and then maybe you can fight fear.
Yes, sir.
So why do traders struggle with patience in trading? What do you think brings impatience in trading?
Impatience in trading.
Yes, sir.
Okay, now traders struggle with impatience at times because they don't have, first of all, plans. And then we have the biggest psychological disease, which is called FOMO. FOMO, fear of missing out. So most of these traders can come up with a setup and are waiting for the market to mature, as in get to their setup. But now in the process, they're tired of waiting. You understand? And some feel like the market might get there, it might not get there. And they feel like the market could leave them, or so they're in between, they're stuck. So that leads them to execute early, take an impulsive trade because of fear of missing out. Now, because of that fear of missing out, you're impatient. You have not let the setup mature, as in you wait for the market to get your point of interest. Let it get your point of interest and then take that trade. If it's not in your point of interest, it means there's no trade. There's no trading. Do not force anything. Do not jump in where the market is. Or they find that they did a setup, the market reached their point of interest and it's moving away. But because maybe they were doing something, they were busy. Now they come back and it's gone. Now, rather than being patient and waiting for the next setup to present itself, they jump in on this one, which has already moved, having a very big stop loss, and then losing. Who is to blame? The mindset.
The mindset.
Exactly.
So their mentor is not involved.
No, it's just you. Again, it's you. Exactly. So
how can I work on my patience? How can I be patient before, in, or even after a trade?
Exactly. How can you work on your patience? Now, it's more of respecting. Again, it goes back to your trading plan. And then set some rules. Be principled as a trader. Are you together? In that, if the market is not in your point of interest, there's no trade. You find that the market has reached your point of interest and it has left you before execution, let it go. Don't chase. Don't chase the market. You know, I always tell my students that let the market come to you. Do not take yourself to the market.
Yes, sir.
Because when you take yourself to the market, definitely you're going to be damaged.
The best thing to do is follow your plans, follow your rules,
respect your trading plan, be principled, and then definitely you overcome impatience.
How does overconfidence hurt beginner traders?
Very good question. So overconfidence, first of all, happens when you're winning. You have consecutive wins. This week you take trades, you win. The next week you take trades, you win. You know, you know, I'm a Muganda man. I'm very Muganda man. I'm called Mutebi. So there's a saying we have in Uganda. A government, it says that omuvuzi w'akagaali wabeera akavugira mu nsiko akola obukolomoni bungi obukodyo tricks bakola obukodyo bungi n'akabukirako n'akavugira naye olunaku lwagenda mu bantu lwe kamukuba. You understand? When they're trying those tricks in people, it's the day they fall. So that comes with overconfidence. When they were alone, they were very confident in the forest, you know, doing the tricks and all that stuff. But the day they are presenting them to people, that's the day they fall. So it's the same thing in trading. Overconfidence kills. You understand? When you win, normally I tell people take a break. Because you're going to be confident. You'll think that anytime you call the market, it's going to answer. You're going to get funny, you know, vibes of let me increase my lot size so that now I get, you know, bigger money because what? I trade like the banks.
You're the goat.
I am the goat. I control the market. You know, that's what traders say. I control the market. I do this. You do not control the market. You're just on a winning streak. So they tend to get to increase their risk. And that's where now the mistake comes in. That's where they start. That's where that downfall actually begins from. The moment you increase the lot size, that's when now you call to the market and it doesn't answer. Just straight up losses. And from there, one thing leads to another, revenge trading. Whatever you have been accumulating, you give back. All the profits you've made, plus your account. So, overconfidence, that's what it does.
Can even take away your confidence.
Exactly. It can kill you. And if you're not strong enough mentally, you might sit down.
And I think that even comes even these people, you know, we hear a lot of traders saying, when I'm on demo trading, I make a lot of money. When I come to live trading, then I start losing money. I think they be making money consistently on demo, and then they feel like they are too confident. Now, when it comes to live trading, things are different. Emotions come in, and then he ends up not making money.
In public, yes, sir.
So now, a good question here. Why do traders quit even after learning good strategies? Is it because of psychology?
That is a very good question, by the way. Normally, I've always told people, or beginner traders, when you're coming to the forex market, learning how to draw support and resistance, or learning supply and demand, learning SMC, learning ICT, whatever you're going to learn, those things are easily done on the charts. They're easily drawn. Anyone can draw. But then change of the mindset is the hardest thing. You understand? Not very many people are willing to change. You understand? Their characters, their behavior. Because we say psychology is a mindset. It is a behavior. You understand? It's character. And very many people are not willing to change their character. You'll find that they are going to learn the best strategy, but because they're not willing to change their character, they give up.
They end up not making money.
So in this market, it's either you change your character, you accept and change your character or behaviors, or the market is going to change you forcefully, or you're going to tap out. So that's why most
that is one of the biggest reasons why they give up. And I think that that is something I have to really actually talk about. Sometimes we teach people forex, we show them exactly what they are supposed to do, but then the way they think,
they don't want to change the way they think. They don't want to change their mindset.
Not making money.
You tell them, don't overtrade. That's exactly what they do. You understand? Do not move your stop loss. That's exactly what they do. And you tell them, okay, why did you lose? It's because I moved my stop loss. You tell them, okay, next time don't do it. You understand? Normally, I have a solution I've always given my beginner traders that write down all those mistakes. I moved my stop loss. That's why I lost. Okay, so you write it down. Because I moved my stop loss, I lost this kind of money. So the next time you're trying to move your stop loss again, look into your book. The last time I moved my stop loss, how much money did I lose? Oh, $200. So this time I shouldn't do it. You understand? So that's
okay. And I think also when you learn forex trading, to the beginner traders there, or even advanced traders, when you're trading any system and it is not making for you money, but then you learned it from someone and they are really making money, I think the problem is not the system. Maybe the problem could be you. Your thinking and your reactions.
Exactly.
Because most people change strategies, one strategy to another. He has learned from Benon, then he says, oh, Benon is whatever does not work. He goes to Daniel, he goes you just have to understand how you think, because the more you keep on changing strategies, you even not find yourself.
Definitely.
Wow, that is really
and that is by the loop that people don't actually get out as well. And by the time they're done with that loop, they just exit the industry. Of strategies. I call it strategy hopping. Support and resistance, supply and demand, SMC, ICT, Wyckoff. I don't know. Wyckoff is actually the hardest strategy, but you find someone that struggling to learn Wyckoff. Come on, bro. And when they're done with Wyckoff, they find out that it's the same results. They go back to support and resistance, strategy hopping. Yet they are supposed to sit down and figure out, okay, if I've learned all these strategies, where could the problem be? You understand? Could it be with me? Could it be with me, or is it the strategies really? Because at the end of the day, there's no strategy which is 100% profitable. You understand? So people are not willing to change. But the moment you're willing to change, trust me, you will make the money.
I think that is something I also tell traders, like, at the end of the day, you yourself as a person, you're the one who make yourself as a trader. For us, we teach you, we show you how things are done, but then at the end of the day, it is you to really fight and you be a good trader, because it's very hard to change someone's thinking. It is you to actually work on yourself.
That is hard. I also tell beginner traders that.
So how does fear and greed show up during live trading? What do you think brings that? Fear and greed.
So as we said, fear normally comes from the previous trades you have taken, and then it comes from the previous trades you have taken. You thinking that you're still maybe on a losing streak, Then for greed normally is an appetite. Appetite for more. All of us have that appetite for more, but you have to control it when it comes to trading, because at times it's required, at times it's not required. You understand? So you find that someone is winning, and when they are winning, they keep on adding more positions, which we call stacking. They keep on adding more positions because they are going in that direction. The market is going into that direction. But have you taken liberty that when you're analyzing the market before, you put a stop loss and a take profit? You had a risk management plan, of which in case you lost, there's a certain amount of money you wanted to lose. But now these other extra positions, you did not account for them. Now that is greed, because a slight pullback into your stop loss. Even though it doesn't hit your stop loss, it will damage you.
Wow.
Yeah.
You can even end up blowing before even reaching stop loss.
Exactly. So that is greed. And that's how it comes about. Normally when people are in profits, they get excited, the market is going my way, so let me maximize, they keep on stacking.
Yeah.
So wrong. So wrong. Yes, sir.
Okay. So greed is wanting more. And the moment you want more, the market might take everything.
Definitely, because now you're off your plan.
Absolutely. So now how do we fight that?
How do you fight that?
Yeah.
Respect your stop loss and take profit. That's one of it. And then be contented.
Okay.
Yeah. When you come to the market and you want, and let me say you want maybe $200, you've made $200, stop. Yeah. Don't go back for more. By the way, there's stacking more in a running position, which is in your direction. And then there's also those that execute a trade. They see small blues, they close.
Okay.
Then they again enter. They see more blues, they close, and then they find out that the market is still going into that direction. They keep on entering more positions. Yeah. Now, I normally tell people that take trading to be like your angry father. Yeah. When you've asked for money from your angry father and they give it to you, do you go back again? The guy is angry. Stop.
You've been talking about a losing streak. So
Yes,
first
sir.
of all, let us understand what is a losing streak. What do you think brings it, and how can a trader handle it?
Okay. Now, a losing streak, this is whereby a trader is losing consecutively.
Okay.
You take the first trade, you lose. You take the next trade, you lose. You take the third, you lose. You take the fourth, you lose. You're just being beaten left, right, center. Yeah. So normally, what causes that? First of all, check with your system. Yeah. Check with the system you're using,
Trading,
or the pattern you're using. Is it okay? Are you confirming? Are you taking impulsive trades, or are you being aggressive in the market, or you're being conservative? If that is checked out and it's all good, then check yourself. What are you doing before that trade? Are you being patient enough to wait for the market to come to your point of interest, or you're jumping in early because of fear of missing out? If that is not the issue, then check yourself when you're in a winning trade.
Okay.
When you're in a winning trade, what do? Do you panic and you close out profits early, and then you try to catch the move again, and then the market goes against you, takes the profits plus your account? You understand?
Yeah.
Then after, what do you do after the trade? After the trade, do you do corrections? Or you're one person who just loses and then you go into the next trade? You lose, you go into the next trade. Because now that means you're prone to repeating the same mistake. You understand?
Yeah.
If you're not doing corrections, you're not journaling, you're not figuring out what you did wrong, and it's the same thing you're going to do, of course, don't expect a change. Yeah.
So now, how do I handle that emotionally? A losing streak.
How do you handle it emotionally?
Yeah.
The first thing you're going to do is take a break.
Okay.
Take a break. Take a breather. Yeah?
Yeah.
And then prepare your mind.
Okay.
And then come back fresh. Yeah? Take a break. Then also do corrections. Figure out where was the problem.
Okay.
Was it before executing these trades? Was it during the trades? Was it, after the trades? Because after the trades, it's normally, I always tell people that the moment you lose a trade, go back to that trade. Find out, okay, when I saw ABCD, I lost. So remember, this market is repetitive. Yeah. It's so repetitive. What it did in 2019 is still doing in 2026. Yeah. So if you can note the pattern and you're like, okay, with this pattern I lost, so the next time I see it, it means it's a no-go area.
Okay.
Yeah. But if you're one person who is not memorizing the things you're doing, for you take a trade, you lose, and you just move on to the next trade.
Yeah.
You're prone to,
repeating the same mistakes.
Exactly.
Yeah.
So after a losing streak, take a break, journal, do corrections, figure out where the problem was, and don't do it again.
So how long? What do you think is the required time for someone to take a break for? Like, is it a week, a day, a month?
Now,
what would you recommend?
Now, all of us have different. First of all, we think differently, yeah, and then we recharge differently because we are different people, yeah.
Okay.
Normally, for me personally, it would require me a day to take a break.
Okay.
Yeah. It would require me a day to take a break, and then a day to reset, revise my notes, go back to the drawing board, and then I reschedule. Then on the third day, I'm back again. Yeah. But then you'll find someone who requires a week.
Okay.
You find someone who requires 2 days or 3 days, depending. Yeah. How long? I cannot give the exact duration, but still, you gotta have to come back. You don't have to take long. A month is too long. A month is too long. You'll find that you found the market here, you'll find it.
You might come back when you've even forgotten the market.
Exactly.
So now I have a very good question right here.
Yes, sir.
There is losing money consistently, like on a losing streak.
Yes, sir.
And then there is also losing money in one trade, that is like blowing an account. What do you think hurts the most? And then how should I handle losing money? Okay, now we've talked about losing money consistently,
yes, sir.
losing streak.
Yeah.
Now what about blowing an account, maybe in one trade?
Okay, now for the fact,
because I think they hurt differently.
But both of them hurt. Both of them hurt, yeah?
Yeah.
Because still it involves losing money.
Yeah.
But then blowing an account in one day, definitely, let me say maybe you woke up early in the morning, very excited, positive, you deposited money at 8, and by 10 it's gone. Wow. In a flash, yeah? Okay, that hurts. Okay. Now, definitely means that there's a very big problem, yeah? Because I would rather lose money in a streak than in one day.
In one day.
Yeah.
That is what I want to know. How should I handle that?
Losing money in one day hurts the most because, first of all, it means that you have done your own things.
Okay.
You have not either followed your rules, whatever you can, no risk management. You've just gone AWOL, yeah? So that hurts the most. And that is the biggest red flag as a trader you can ever get. You understand? Yeah. That should put question marks to your trading, either to your trading system or to your mindset. If you have a very good system, then you blow in just a day, that means that the problem is you then.
Okay.
Yeah? So there has to be question marks, either in your risk management, in your system, or in yourself. Yes, sir. So a loss in a day, that hurts the most.
That hurts the most. Okay. So how long should I also follow the same system, like take some days off, come back and review, and then I come back to the market when I just blow the account?
Okay. Now, when you've blown your account in just the first day, first put your tools down, and then figure out, is it a system? Take time to get knowledge about the system, proper information about the knowledge. About the system. Yeah. Okay. Then, if it's a risk management plan, it also, requires you to learn about it. Yeah. Okay. How can I manage my lot sizes? How can I? What stop loss should I use? Take profit and all that stuff. Yeah. Then, if it's you as well, take time off to do some things. Yeah. Okay. Some things like, first of all, reduce your capital size. I always tell people that if you want to practice psychology, first deposit little money that you're willing to lose. Yeah. Okay. Because you tell someone, go and work on your psychology, and they're working on it from a demo account. Come on. Come on, bro. A demo account, you have no feelings attached to that account. Yeah. And that is not your money. You understand? In a demo account, you can take a trade and then you go and watch a movie.
No stop loss.
No stop loss. But people take trades, live trades, and they're driving in jam and they're looking at their phones. That's what a real account does, yeah? So it means you're still struggling with something the moment you're doing that. Yeah. If you cannot take a trade and put away your phone and do other things, it means there's something you're still struggling with. Okay. You understand? Yeah. So you literally work on it. Okay. So how you can, what you can do, from whatever you blew, now reduce the money. Okay. Deposit what you're willing to lose, and then work on your psychology step by step, and risk management. Yes.
Okay. Yeah. So you've been talking about something important about impulsive decisions, jumping into trades when maybe they are leaving or whatever.
Missing out.
What brings that? Yeah. Okay. FOMO. What brings that?
Excitement.
And greed.
Greed, panic. Okay. Some people, by the way, that they do not intend to press the buy or sell button, but because they are panicking, they just find themselves. You understand?
The guy is shaking,
and they're like, okay, what can may? Now they start praying. Yet before that, taking, they didn't pray. So normally, FOMO is caused by either panic, excitement, or
wanting more.
Wanting more. Yeah. Yes, sir. So yeah. Okay. That is what would cause that, and the only way you can get rid of that is being highly focused and then being patient enough to let the market come to you. Okay. You not taking to yourself. Yes, sir.
So now there's also moving stop losses. Like someone enters a trade and then the market is going against them and they keep on shifting their stop losses. And then when they're in a winning trade, market is close to their take profit. Yes, sir. They don't even wait for it to reach take profit. What brings that?
Very good question. Now that is another disease under psychology which is called false hope.
False hope.
false hope.
Yeah.
Yes, sir. So you take a trade, it's going against you, it's almost reaching your stop loss, and then you keep on adjusting your stop loss, hoping it's going to turn around.
Wow.
As if Trump called you and he's like, I'm going to turn the market around. Yeah. Why would you hope? Come on. When you're analyzing this market before, you realize that, okay, in case the market gets to this point, if you're selling and you're like, in case the market gets to this point, it means it's no longer going to come back down and so. But then it reaches that point, then you keep on adjusting the stop loss. It also comes close. You keep on adjusting your stop loss. You don't have a call from anywhere that is going to turn around. So stop being hopeful. I'm not saying be hopeless, no, but just don't be too hopeful. It's called false hope. And at the end of it all, the only way those people get satisfied is when they reach zero balance. You understand?
When you blow.
But why would you wait for you to get there? You understand? Close. Respect your stop loss. Let the market stop you out. Go back to the drawing board. And then move on.
So that means people are supposed to be comfortable with losing money.
Exactly.
The moment you put a stop loss, you've accepted. If this goes, I'm okay with it. You don't need to shift it. Make peace with your loss before you actually take a trade. Absolutely.
You understand? Make peace with it so that when it comes, it's not a shock.
Yes, and I think also when you shift stop loss, you don't trust your strategy. Because the strategy has already told you this is where you're supposed to put stop loss. You're removing it, you're going against what the strategy is telling you.
You're not respecting your trading plan at all.
Okay. So that is really, really very important. Shifting stop loss increases your risk also. Because at the start, you're comfortable losing $50. When you shift, you're adding
exposing
on
your account.
Perfect. So now what mindset separates a profitable trader from a losing trader?
Okay, what mindset separates us and then with the beginner traders or the losing traders? Now that mindset is literally positive thinking. And then proper system. Yes, sir. Now when I have, for example, I have a system. You have a system, and even though you lose today, you know that tomorrow you'll come back better and stronger, because you've used the system multiple times. You can determine the outcomes. But now a beginner trader, first of all, they don't even have a system they're following. Today they're trading supply instance, tomorrow they're trading supply and demand, the next day they try ICT, the next day SMC, you find them in order blocks. What? You understand? They don't have a system, they're all over the place, you understand? But now you're a professional trader, you have a system and you believe in it. First of all, you well know that there's no system which is 100% profitable. I'll take a trade today with my system and I lose. I'll just know that maybe I'm in the 20%. My system is 80% win rate. I'll be like, I'm in the 20%. So definitely tomorrow I'll have to make it back with proper risk management. Then the next day, I'm up there. But then a beginner trader who does not have a system they believe in, they cannot be consistent. You understand? Today they're trying this, tomorrow they're trying that. They're all over the place. You understand? So that is what separates the professional trader and the beginner trader. Yes, sir.
So losing traders does not have anything they trust. They just want to, this and that and that.
Exactly.
And also that is why most people get locked in on YouTube. Today he watches a video about SMC,
very good. Yes,
ICT. Like he just keeps on switching from one place to another. And I think a profitable trader should really focus on one thing.
One thing, exactly.
Believe in it.
And then move on. Because it's easy for you to determine the outcome of that thing rather than being all over the place. Bruce Lee said something, a quote, which I really love. He said that he would not fear a man who practices 1,000 kicks. A man who practices 1,000 kicks, he would not fear that person, because all of them could be weak. But a man who practices one kick 1,000 times, the moment it lands, bro, the moment it lands, you meet your maker. You understand? So
understand.
It's the same thing in the market. Profitable traders have one kick. That one kick is simply a pattern. They respect and follow that pattern because now they can determine the results or the outcomes. Now, you as a beginner trader, you're all over the place. You're in 1,000 kicks. You're practicing this, you're doing that, you're doing this. You're all over the place. You understand? So you cannot even be confident and you can't meet your consistency.
Wow.
Yes, sir.
That is really interesting. So now a good question here. Have you ever taken what is your biggest loss you've ever taken?
What is the biggest loss I've ever taken? I've lost over 11,000 USDs.
Wow. In how long?
It was in a space of 2 days.
2 days. Wow,
Yes,
that is really big. So how did it affect you and how did you react psychologically from that big loss?
First of all, that loss came from psychology.
It was even before.
It was a psychological thing.
Wow.
Because the first day I lost, I lost, it was over 3,000 USDs, It was a funded account. I lost over 3,000 USDs and I was like, okay, okay, let me respect my everything, you know, I'm trying to be sleek and cool,
Yeah.
yes. So I'm like, okay, but that thing kept on hurting me.
Yeah.
It was a big loss, 3,000.
How can I lose this money?
How can I lose this money,
Yeah.
you know? I'm like, okay, but, you know, I came back for the second time. Let me try to make back this money. That's revenge trading now.
Wow.
You understand?
Yeah.
So coming back, I lose another 1,000. I'm like, okay, let me get done with this. I know where I'm going. You understand? So the next day, I wake up very early in the morning, hyped up, pumped up. I think that I've refreshed, but I still have the same thoughts of I want back my money. I had a big loss yesterday. You understand? Still, I did not make peace with the losses I had made. You understand?
Yeah.
So yes, you will think that you're taking a break from the losses, but when you have not made peace with those
With them,
losses,
yeah.
exactly.
Going to
So
come
it
back
will
to that.
still result to the same. It will still give you the same result. So the next day I wake up and I'm like, I still want to make back this money. I come back in the market thinking that I'm fresh and all that stuff.
You're still stuck on your loss. Yeah.
My mind is still there. So I keep on trading and then I just kept on losing. I kept on losing. So everything just ended up into revenge trading. Yeah. And then I blew. I actually didn't blow, I was suspended.
The wins and the losses,
Yes, sir.
what do you think brings emotions the most?
The wins and the losses.
Yeah.
Actually, both of them contribute to emotions.
Yeah.
But the biggest contributor to those dangerous emotions are losses.
And losses.
Yes,
Yeah.
because very many people don't actually come out from there, from the losses. Yeah,
Yeah.
and very many people develop weird characters, and then they develop fear. You find them that they are good at a strategy. They can teach it to someone, and those people that have told they can make money, but you find themselves are not even using it.
Okay.
You understand?
Yeah.
That's why I always tell people that when you get a mentor, better make sure that the mentor, whatever they're teaching you, they're using. You understand? And they're making some money out of it.
Yeah.
At least let them show you some profits or
Yeah.
some history.
Yeah.
Other than teaching us strategy, they are not using.
And yeah,
Because in
exactly.
forex, it's not like the churches. Do as I say, not as I do. Yeah. Here, do as I do. You understand?
Because it is proven.
Because it is proven.
Yeah.
It's a proven system I'm using.
Yeah.
So here it is do as I
As
do.
I do.
Yeah. So losses contribute more to emotions than wins.
Okay.
Yeah.
So I think that is why most people actually give up. It's because of losses. I don't think someone can be winning and then they just run away from the industry.
You can't quit the industry.
Oh,
definitely.
Wow. I think there's also saying like when you win too much, it damages you as a trader. Is that true?
It damages you as a trader if you don't have control.
If you don't have control.
Yes.
Wow, that is a good one.
If you don't have control over the wins,
Yeah.
Because now we say that when you win a lot, you're going to be very confident.
Overconfident.
Yes, sir. And you would want to increase your portfolio. And then the moment you do that at a wrong time, it's going to damage you.
Wow.
And if you can't come back from that damage, then definitely you stay down. Yeah.
Yeah.
So winning a lot is okay, but then you must also control it. You
I
understand?
think that's where the goals that you talked about come in.
Exactly.
As long as you have goals, you set them, stay away from the market.
Exactly.
Yeah.
The moment you meet them, stay off the market and stick to your script. Don't go off your script.
Yeah.
Script, I mean your plans.
Yeah.
Risk management plan, trading plan, your personal plan.
Yeah.
Don't go off those because those are the ones that literally give you the control over the wins plus over the losses. Yes, sir.
Okay, now, so Mentor Benon, there's me personally, there's something I passed through that I want you to tell us about.
Yes, sir.
There's a time I deposited $1,000 and then I went in a drawdown of almost like $600. Like, how does a trader supposed to react when they are in drawdowns? How do they come back from drawdowns and then they eventually see themselves making money?
Okay, so not in a losing trade, but in just drawdowns.
Yeah, just in a drawdown. For example, I deposited 1,000
Yes,
and then I go negative 600.
Negative 600.
Yeah, that means the market has my money.
Okay, now literally the market doesn't have your money. I suppose the market doesn't have your money because mental man, when you're trading over there, when both of us are trading gold, you're selling, I'm buying, and you're winning, and I'm losing. Definitely, the money is coming from me to your account.
So now someone has my money.
Exactly,
I want that
it
money
could even
back.
be your mentor.
How can I come
Yes,
back from that drawdown?
So okay, now how do you come back from that drawdown? First of all, having such a big loss on your account, that is bad. Red flag. Number one. It means first of all take a break. First give the account a breather. Because definitely the moment you're going to come back, definitely as you say, the market has my money. That is the mindset you're going to have. You're going to try to get back your money.
Revenge.
And the market is not going to hand it over to you like that. You understand? So definitely you can even take whatever you have left here. So definitely the first thing to do is take a break, take a breather. Check out your system. after looking at your system, look at your risk management. Were you practicing proper risk management, or it was off?
Yeah.
If it was off, it means that lower your risk. Yes, sir?
Yeah.
Lower your risk. Then if it's the system, it means that if it's a system with problems, then it means that work on those problems. Are you now, normally systems also have what we call entry modules. Yes, people confuse those things. You find someone trading supply and demand, but the entry module they're waiting for is candlestick patterns.
Okay.
You understand? You're like, come on, bro. Candlestick patterns is for support and resistance. So it means that you're mixing two things at a go. So you could find that the problem could be with the system, or it could be with risk management, or maybe your personal plans or problems, psychology. So the moment you realize your mistake, the first thing you do with such a big drawdown is first take 2 steps backwards. First stop trading on that account, give it a breather. Yes, and then analyze the situation you're in. Analyze what you did, and then figure out the problem, and then you can easily work on it. Yes,
now, what is the mental approach to accept a loss? What should I do and just be comfortable with a loss? The mental approach to accepting losses.
The mental approach to accepting losses, normally, you know, I always give this example. We've gone out, you've gone to maybe a bar, a club or something, and then you go with a mindset of, I'm going to spend this kind of money. Okay. You understand? Yeah. Or even in your daily routine, you'll be like, okay, I'm going to go out and then I'm going to do ABCD, you know, and all those things are going to require this kind of money, and that's the money you work with or you move with, Now, it's the same thing in trading. Before you take that trade, find out how much money you're willing to lose off that trade. And then be comfortable with it. The way you leave your home and go to the club with that money you're going to drink. You understand? Yeah. So before that trade, find out how much money you're willing to lose in case the loss comes. Be comfortable with it. You understand? Yeah. Accept that, okay, I'm okay losing $5. It's okay. It will not damage me a lot. I still have portfolio to go again. You understand? So that is you making peace with the trade. And at the end of the day, you're not going to panic. You're not going to have pressure, even when you're in a trade, because you already made peace with the loss that is coming. You understand? So you won't be shocked by anything, and that will actually let you let that trade move smoothly. Okay. Yes,
so not be too much attached to it. So how can traders avoid attaching emotions to money?
How can you avoid attaching emotions to money? First of all, deposit money. You're okay.
Comfortable to lose.
To lose, exactly. Don't just come on using your tuition. Yes, people have used their tuition and have made money out of it, but maybe the day you're trying to do that is not your day. You understand? So do not deposit first of all money you need. And I always tell people it's not good you take a loan and then you trade. You understand? Because you're going to exert a lot of pressure on that money. Exactly. Is it your rent money? You deposit that money, you're going to exert a lot of pressure on it. Definitely. Even though you just lose $1 off that money, thoughts are going to come in already. Hey, I should have paid here. And you understand? So with such thoughts, you're not going to trade in the right mind space. You understand? You're not going to be in the right mind space to trade. So do not deposit money you're supposed to use for your personal things. Deposit money you're okay losing, or deposit money you're willing to invest. You understand? And then that's how you will actually detach feelings from your account. Exactly.
And I think also to add on that, I've seen a lot of traders, like, because we normally emphasize stop loss. Someone takes a trade and they have a stop loss of maybe they're risking $100.
Yes, sir.
I think this can also help you to know that if am I really comfortable to lose this $100? In case market goes against you -50 and you start panicking, you're on pressure, that means the 100 you're risking, you're not okay losing.
Exactly.
It.
So that means
go back
your
and change
risk management plan. Exactly.
You just have to change your risk
management.
You have to write it, because the moment you're too much attached to your money, it's going to bring a lot of problems.
Definitely. You can't trade properly with a lot of attachment of feelings to the money you're having. Someone sees they're losing $2 and they start screaming and making noise, They're sending you screenshots. Do you think this market will come back? Do you think this market... I don't control the market, guys, Just accept the loss.
Okay.
If it doesn't come, yes, sir.
Okay. So now, why is consistency harder than learning a strategy?
Why is
consistency harder than learning a strategy?
Okay.
Because you emphasized something. You said technicals, anyone can be good. But now making money consistently is a problem. Why is it that?
Why is it a problem? Now, consistency literally comes from discipline.
Yes, sir.
The Holy Grail, I always told people that Holy Grail is not a strategy. the holy grail is discipline.
Yeah.
You understand?
Yeah.
You're going to find that we are two types of traders. We are going to take the same trade. You lose, I lose, but I'm not moved. You understand?
Yeah.
And I'll come back tomorrow like nothing happened. But for you, come back tomorrow like you lost the entire world. You understand? Those are two behaviors, you understand, from two different people.
Yeah.
So consistency literally comes from proper behavior, discipline.
Yeah.
You understand? Proper principles and then rules and regulations that you follow. But then learning a strategy, it's quite easy. You understand?
Yeah.
Because you're going to meet mentor Osman or me, and then I'll tell you that at this point do this, at this point do that. Yeah. But now when the market gets to that point, the feelings you have in your gut, the mindset you're having, even though I told you that do ABCD, at that moment you're going to be a different person.
Okay.
In the mindset, not in the strategy. The strategy has presented itself. The market has come to you, but now the way you think
is the problem.
Upstairs, will become the problem. So that can shorten your consistency, or it can actually prolong your journey.
Okay.
Yes, sir.
I think to put it together, strategy, you're learning from someone. Consistency, it is going to be learning from yourself. And it's very hard to really learn from yourself.
And I always tell people that this is a business. This is a business.
Yeah.
I do it full time, you do it full time. You know this is a business, which you have to plan for.
Absolutely.
So some people look at it in an absolute different manner, and they think anytime they call the market, it's going to answer. You understand? So you must understand that this is a business. Plan for it properly. You understand? So someone will learn a system, but they're not going to have business characters. And they're going to be trading in a way of I want money. I want money. You understand? I want $100. Oh! Daniel posted. He made 10 USDs with 1,000. Okay, let me deposit 1,000. You understand?
And I do that same.
So because of that pressure, they're not going to look at it the way we look at it as pro traders. You understand? So that definitely their consistency is going to delay. Okay.
And then how does journaling improve a trader's mindset?
Very good. I love to journal. Mistakes, wins, I journal all of those things. Because from the mistakes, when I write down my mistakes, the next time I'm trying to face the same problem, I look into my book. Okay, I've ever faced this problem. Because definitely, the best thing about trading, the moment you make a mistake, you realize. It's very good to know that here, because of ABCD, I lost. You understand? So write it down. So that next time you go back to it, you revisit it. The moment you have the same gut feeling, you revisit it and you're like, oh, the next time I had this feeling, I lost this kind of money. So which means I don't have to do it. You understand? Then when I'm winning, I take note of the pattern. Because now that is a money-making pattern. So the next time I see it again, I've seen this before. You understand? So that is my money-making pattern. So I go again because now I can determine the outcome or the results. So journaling is very key. It's very important. Never stop journaling. Never stop journaling. Journaling is good. You'll write down your mistakes and you can easily work on them. You'll write down the winning formula and you can easily keep track of it and then keep doing the same thing over and over again. And then
journaling is like bookkeeping in other businesses.
Exactly.
You cannot track your progress if you do not have records. You're supposed to note down everything, and then that is how you know, am I growing or not? So now, what daily habits build a strong mindset?
What daily habit could build a strong mindset? First of all, the number one thing is positive talk. You can't wake up angry and then you come to the market and you want to make money. Definitely you have to first be positive. You wake up and you look outside your window and you're like, people are looking ugly, and you just have bad vibes. You can't come to the market with bad vibes. The market doesn't know whether you have bad vibes or not. Definitely it will take your money. Understand?
And it's a mirror. It reacts to how you feel.
Exactly. The very good thing. That is a very good thing. The market mirrors you. Exactly. So with the way you come is the way you go. You understand? So the first thing is be positive. Be positive. Whatever happened yesterday, leave it for yesterday. This is a new day, or a new week, or a new year. You understand? Be positive. Then another thing, targets. Set targets or set goals. That okay, it's a new day. I want to make this amount of money, but in case things don't go my way, I'm willing to lose this amount of money. Then come. You understand? Don't just come from your bed onto your laptop and then you're trading. You don't even have a target. You understand? That is so wrong. As I've said, positive thinking and then setting goals and targets.
And I think also journaling.
Yes, exactly. Journal your day, how it's gone. take some water. Drink some water as well. Don't be thirsty in the market. Drink some water. Have some good food. And then definitely be healthy yourself.
Okay,
You understand?
yeah.
Keep yourself healthy, and then definitely you keep going.
I think that is actually take me to the next question.
Yes,
How
sir.
does health, sleep, and lifestyle affect trading psychology?
Definitely, that's a good one. Health, lifestyle, and then sleep. How do they affect
trading
psychology?
psychology?
If you don't have enough sleep, upstairs you're not going to be okay, because we human beings, we are like batteries, you know. We charge when we sleep.
Yeah.
So when you have not charged, definitely you're going to be fatigued. You're going to be mentally not okay. Definitely. So you cannot think straight when you're trading. So you need enough sleep. And then for lifestyle, normally your lifestyle might not affect your trading, but then some people, other people's lifestyle affects their trading, because they want to be like them so fast. You want to be like Benon in a week, in your first week of trading. Come on.
So now, this is a quick one here.
Yes, sir.
What, according to your experience as a trader, you know, you've mastered psychology, you know, you're very sure that you can handle your emotions, your behaviors, and everything.
Yes, sir.
If you had to give one psychological rule for forex success, what could that be?
Yes, now, first of all, psychology or mindset or character, it's not mastered. That's, by the way, one thing. I don't want to lie to you. Psychology or mindset or character is not mastered. Yes, you can be good at it. You can know when to control, but that day is whereby you can fail to control. But then what you should work on first is make sure that you can control the biggest part of it, or you can control the biggest part of yourself. You understand? Yes, those bad days will come in when you can't control, but make sure that the most of the days, when the bad days come in, you can do what? You can control. So what I would advise someone out there about psychology, the biggest thing that can help you master it properly is journaling. Journaling. Because when you journal your mistakes, when you journal your wins, definitely you can easily recap and then, you know, not repeat the mistakes, and then, you know, keep on with the winning records as well. Yes, sir.
So journaling is really, really important.
Very
Another
important.
good question. What is, because we all make mistakes.
Definitely.
You know, what psychological mistake cost you the most money in your trading career?
FOMO. Revenge trading. Yes, sir. FOMO. I struggled with FOMO. I remember as a beginner trader, I struggled with FOMO a lot. Fear of missing out is something big. The market is leaving me. Come on, it's not you brought it there. You understand? And it's not going anywhere. By the way, you must know that the market is going nowhere. You understand? Trust me, you're still young as a beginner trader. Even your kids will find that market. Even your grandkids will find that the same market. So why should you fear that it's leaving you?
Actually even tell traders we are going to die and leave the market moving.
Definitely. It's not going to stop for you or anyone. So it has to keep on moving. So why would you fear that the market is leaving you? There are very many opportunities in this market. I struggled with FOMO as a beginner trader a lot for the biggest time. I remember there's some time I was leaving work when I was still working a 9 to 5. I was leaving work while I was, you know, trading. There was NFP. So I feared to enter NFP before because people are saying it's not good. But then on hopping onto a border to get to my location, the next location, I reached there and then I find out that actually the market had bought. And it's what I had previously as my speculation that would buy. So now I thought it's going to keep on moving. So now still that is FOMO. I feared that the market is leaving me. I jumped in on buys. That is when it turned around and then I blew before I even got into the house. You understand? So that is so wrong. That is FOMO. So I struggled with FOMO a lot, and then revenge trading. Revenge trading. I kept on going back for my money.
You've really given us solutions to those problems. So what advice would you give to traders who are stuck and frustrated? They feel like they just want to give up on trading. What advice would you give them?
Now, in the market, you don't have to be stuck and frustrated. First of all, find someone who's better. Who's better than you at what you're doing. You understand? Seek guidance. You understand? Because we all struggle. Yes, I might not tell you that stop fearing, but I'll tell you certain things that, okay, do ABCD, they can help you,
With
overcome fear.
Okay.
Yeah. Or do this and that, and then you'll stop, being greedy, or you'll stop overtrading, or you understand?
Yeah.
I can give you tactics that can help you through those problems or those mistakes that you keep on, doing in the market. So seek guidance, first of all, and then still do the positive talk to yourself. So don't just quit. You understand? Because you never know, you're quitting today, but tomorrow that is when you're going to have a winning share. Exactly. Breakthrough. So just keep positive. Don't think negative of yourself. Don't put yourself down. Find someone better than you at whatever you're doing. If you're having mistakes with whatever you're doing, find them and then let them guide you through. Yes, sir.
I think that is something really important, because I normally tell traders, like, a smart person learns from their mistake, but then a wise person will always learn from other people's mistakes.
Exactly.
Like, just find someone who has really done it in whatever industry you want to join, and then they show you step by step on how you can do it. Definitely. So this is my last question here. Do you think it is possible for someone to win in forex without a very strong mindset?
Never. Never. Bro.
It cannot happen.
Yes, because mindset, even in life, even life itself requires mindset. The weak ones don't make it, and the strong ones mentally survive, and then they make it. So in the market, definitely you can't survive, and the market is brutal. Facts, the market is brutal.
Very.
The market is one thing whereby you execute a trade, and then it plays from your entry level for like an hour or two, just to challenge you mentally. The market sieves. It's going to sieve out the weak ones mentally, and then the strong ones mentally, it will reward them with money. Absolutely. So it's going to play from your entry price just to test you. You see small blues, you see small blues, you jump out, or the market flies, and then it goes into your direction.
Then FOMO comes in.
You understand? So the market is going to test you in all aspects. You understand?
Okay.
So without a proper mindset, you cannot trade. Exactly. So it's crucial.
It's very, very
plays the biggest role.
Okay. Yes, so psychology is really something important. And on the chart of trading, we normally say psychology almost takes like 60% of your success as a trader. Once you fail to understand who you are, because we show you the rules and everything of how you're supposed to manage psychology, but we don't know you. That means whatever we tell you, you're supposed to find a way of figuring it out and place it into your personality, and it helps you improve as a trader. Because one thing is for sure, there is always the right mindset to make money. You get, there is always the right way to make money. So the right way is one, proven, and then you just have to follow it. You either accept and follow it, or you don't. And psychology, Mentor Benon has been trading for 7 years. So you're learning from his experience. There is a reason why he's emphasizing whatever he's emphasizing. He has seen it, he's journaling, he has seen repeatable mistakes, repeatable things that have really given him enough money. What is your biggest win ever?
54,000.
54,000 US dollars. In how long?
It was a funded account.
It was a funded account. It was a payout.
Three weeks.
Oh wow, that is a very, very interesting one. So just imagine making 54,000 in 3 weeks. If that does not show you how important what he says is, then I don't know how you're going to really reach those levels where we see big money. So in your final remarks, just tell the traders out there, what would you want to tell
my
them?
last words? Please be willing to change. Most of you are not willing to change mentally. You have the right system, but you're not willing to change your behavior, your character, you as yourself. You see me right here. Before trading, this is not how I was. You see, even on the road itself, I'm very patient. The market will teach you, it will humble you. So be appreciative, take the market for what it is. Accept to change. You understand? If it's fear, get rid of it. If it's impatience, get rid of it. If it's greed, get rid of all that stuff. You understand? Be willing to change. Accept that you could also be the problem rather than the system.
Absolutely.
Most of us keep on blaming the systems and other stuff. Yet we are our own problems. Trust me, in this market, it's you against you. Not you against anyone. I'm not against. When I'm trading, I'm not trading against Osman. Neither am I trading against the biggest traders. It's you against yourself, you understand? Because it's you who's going to close this trade, either in a loss or in a profit. It's you who has control. Should it keep on running or not? You understand? So let us be willing to change in the market. Let's learn from our mistakes And then definitely consistency will show up.
Absolutely. That is really interesting. Be comfortable with changing, because changing will take you to the right direction. And most importantly, you're changing from someone. You're actually learning change from someone who has already changed. So why don't you just listen and then you make money? So let me hope today's concept has really helped you as a trader. Let me hope you're really learning from this podcast. Whatever you think that you want us to talk about, just comment below and then we see how we are going to help you. Psychology is really important. You cannot be consistently making money in forex if you do not have a strong mindset. So thank you for coming, Mr. Benon.
You're welcome.
We really appreciate for your knowledge, and
thank you for this great opportunity.
People who are really watching out there, they can also learn from whatever you've done.
Yes,
so everything is possible
so
once you put your minds on it. And remember, what makes you successful is your mind, not the energy you put in.
Definitely.
How you think is what makes money, and then how you react. And psychology really focus on how you think. Take the tips, put them into action, and trust me, you're going to see yourself changing. So see you on the next episode.